But Samir Arora is very clear right now. It's time to take a chill pill, and that's what his latest tweet seems to be indicating. So Samir, I can't see you, but
you're right. Hello.
yes, Samir, take a chill pill. That's what you are actually telling your Twitter followers right now. One should just take it easy.
Correct. Actually, the thing is, you're absolutely right when you say that where is the bear market if you look at the large caps, and where's the bull market if you look at mid caps. And therefore, one way is that you wait for one direction, or what we do, which is that we always have a mix of large and small cap, and mostly around 30% is mid cap and 70 is sort of largish, which works over time very well. It saves you a little bit of pain in these times. And when you are doing well, you might be underperforming a little, but because we are a hedge fund and the investors are interested in absolute return, it doesn't look that painful, say last year when many funds may have done 5 to 7% better than us. So overall, a mix is the best because really nobody knows how far these things can go.
So Samir, is this volatility a good buying opportunity? And when July of 2018 will, when we'll look back at July 2018, will this be considered as a buying opportunity, or do you think this is the reality and the excesses in the market will continue to get weeded out and we could be in this downturn for an extended period of time?
See, the thing is the question is how far ahead you look back. So if you look back and say 23, maybe 18 would look great, and even end of 18 would look great. But normally people don't have that long a horizon. So we have to say whether it will be materially lower 5, 3, 6 months down the line. I don't have an answer to that, but I can't imagine that it will be materially higher. So because we are a fund and all the time we are doing something, so we will remain with our 60% type net. But for a completely new guy, not saying some, nonsensical mutual fund story, buy systematically, buy SIP. If you have to tell him buy one time, I don't think you have to tell him that buy today. He can wait. But obviously, when we say to investors, we say, buy over time and you'll get the average. That will remain I don't have to give you an interview. If I was sleeping, my machine might answer saying, don't market time and all that. But your question is different. Your question is whether today is a good time, per se. I don't think it is. The big picture principles will never change. That don't try to time, don't try to think that you know more than the market. Which absolutely, I am part of that storytelling. But I'm saying if you really want to discuss only today, right now, what is happening good, what is happening bad, I don't think this market is going anywhere.
Right, and that's why it reminds you of Shairi, because that's what you just recently tweeted.
The thing is that, when I'm in office, our stocks are very long term, most of them. Only some shorts we add as we go along. Rest of the time I'm reading and I am on my emails and I'm on Bloomberg. So this is to keep myself busy.
A time like this where maybe the market direction is not very clear, or for that matter, you don't feel compelled to deploy funds, is a great time to actually indulge in a lot of research to figure out opportunities. So what is it that's coming up on your radar in terms of, some of the trends that could be in the making, but they're not obvious just as yet?
No, that, normally is very difficult to say, but generally right now, it is because we are always reading something which you can call research. It just looks like a better sounding word. But the point is we are always reading or talking internally or externally. And right now, the amount of money that is being made in shorts is quite obscene. It's quite amazing. And so right now the energy is in finding shorts. And I think these shorts can go and make another 20%. I mean, many of the shorts, individual names, not collectively, have made 40, 50% this year is a dream. And so right now there's no energy in trying to buy a correction. Right now there's energy in saying which of them are going towards zero. And there are quite a few. Now, zero doesn't mean literally zero. Please understand, I exaggerate everything when I talk. But what I mean is there are many stocks where it's easier to make 15, 20% on shorts than to make 20% on longs in the next, say, 6, 9 months. Before, hopefully all these things settle down. both relative to India, elections, politics, global, etc.
Samir, but there's plenty to short out there. What do you short? Because it's a problem of too many right now.
Actually, I think it is because basically, see, what we have realized is that right now the market and the market participants don't have an energy to aggressively buy anything which has a problem, right? Because in the olden days, somebody could say, I am bullish, this is being wrongly. Now it's hands off. You get one line of problem. It doesn't matter that the stock is down 5-10%. It doesn't matter. It'll go down another 15-20%. You give me any example other than if it's a high quality name. The good thing is that there are 200 and some 4 listed single stock futures. And if 30-40 of them have a problem, that is enough to make serious money. And nobody is going to go against them. See, we have to check 2 things. One is it should have large institutional ownership currently, because none of these guys will be able to handle a bad event or a bad issue. And it should be in futures and somewhat liquid, and you just pile onto it.
You know, I liked your deep meaning tweet yesterday, Samir, where you said, trade light, that's wear a t-shirt, keep the shirt dry, bigger funds, to be worn, deployed when the time is right. So when, according to you, would the time be right? What are the dynamics and the fundamentals that you're tracking when you think the time is going to be right for the shirt to be worn?
By the way, even I discovered that meaning today. That this is what the tweet meant. But the point is, see the thing is...
Samir, all I gotta say is you've got too much spare time at your hand. The market's better do something constructive.
We are not like a typical viewer in the sense that we are always in the market, right? Even today, whatever I may say, bullish, bearish, I am 60 or 58 or 62 net in the market, and that is my longer term average. So my goal, if you make it a period like 2014, I'll maybe 70 net. So I have to move only 10% in an ongoing this thing. So for us, it's never a start. If we lost money on some shorts, if we cover 4 shorts, we will be 70 net. So don't look at us and say, what are you doing every day? Because for us, it's chiseling now. The main structure is already there. So the question is, which are we long and which are we short? Precisely on which day I might cover 3 of these shorts and suddenly become 68 net, even I don't know ahead of time. The point is that there are some sectors doing well and some sectors are doing badly, but the overall market is not doing well. And that is because of experience, we accept it. And because of experience, we laugh at it. And because of experience, we can even tell our investor that, sorry, this is the way this market is this year, because last year was very good, last 3 years were very good, and they accept it. So it's that kind of an environment where, from an India point of view, from a system point of view, there is no help. I'm talking about the regulatory help for attracting foreign money. Right now, there are at least 10 problems because of which no India dedicated fund has the time to raise even $1, because there are issues about tax, there are issues about whether even I as an NRI can own this AMC, or whether I should give these shares to my secretary to make it look like a foreigner owns it. We don't know whether futures, we should do it in Singapore or in some dreamland in Gujarat, or, there are so many things which have basically stalled this for the moment. But because we are Sagittarians and humorous guys and India dedicated, we say what a great thing.
Talk about a subject that you again, in your tweets have taken up, perhaps not discussed it at length, which is the corporate governance issue. You're saying that, and I wanted you to elaborate more on that, because you were actually saying that individuals also who slip up on corporate governance should be brought under the scanner. But what is your larger theme? I mean,
No. Actually, the thing is, don't overlook at my tweets because they are half. The big point was that actually it was not to say that individual should be let go. It was that we let go of corporate governance too easily. We let go of a reporting thing. It doesn't matter. The parent will look after this company. That's not the point. It's like saying if I go and go stealing in a shop and after I catch, they say, no, I'm willing to pay. Actually, my credit card was in my pocket. Actually, I have a credit line. I'm willing to pay. It's just that you didn't catch me. It was those kind of things. But we can't. We are not supposed to talk about anything. We are only supposed to pass time on these interviews. So that's what we are doing, because nothing we can discuss openly. But the point is, we cannot let go of corporate governance like this, saying, no, it was never our intention. That is nobody's intention. If you're caught, you're caught. You can't say that I give you this guarantee. If nothing fails, the guarantee has no meaning. But if it happens, don't worry, we will compensate you for it. I don't accept all this kind of crap.
Samir, now when you say that when you are slightly cautious, your long exposure comes down to 60%. When you are bullish,
no, my net exposure.
Of course, net exposure, and it's the other way around to 70% when you're generally bullish. Now, so when I say you're cautious, what are you cautious about? Are you cautious about earnings recovery, or are you cautious about rich valuations which the HULs and the Britannias of the world have started commanding?
So I am cautious about the fact, or not cautious, but in a sense, yeah, cautious you can call it, that there are two markets, and you can't really say one part of the market, which is these guys doing badly, the state-owned banks and all, and you can do what you can't really save. You can't easily save the telecom guys in a stock market sense, not in a, what I mean by stock market sense is for them to fall 10, 20%. On the other hand, from a big picture angle, for the whole market to do well, for FIs to come back, for fund managers to go and bang the table, there is no support. In fact, it's negative.
You're saying that there's not much to talk in the markets. How come you're in the middle of earnings, and if you go by what TCS and NV have said, then the talk in the market is about looking up on IT. Also HUL, good numbers, good growth. So, if
correct.
the bellwether names...
We are not shorting those stocks, I agree. I'm saying there have become two markets, where one market is doing well and one is doing badly. But the overall market, see, one is relatively, one part is doing well, one is doing badly. But one is an overall market, which is whether within, there's this relative difference between two groups, which is great from a long short point of view. But the overall market is not being held by what we are doing.
Whereas it's 8 stocks, 10 stocks, it's debatable. But a very personal thought which I had last week was that, is the market really narrow? Because India's biggest IT company sitting at an all-time high. India's biggest software, India's biggest FMCG company at an all-time high. India's biggest private bank at an all-time high. India's biggest energy company at an all-time high. So some would argue that the selection of stocks at an all-time high is very widespread.
No, it's not like that. I agree with you, but broadly speaking, what this means is that 20, 30 companies which are leaders are doing well, and now you have to take a bet that because over time it can't happen like this. So either the rest of the market has to catch up with the large caps, or the large caps have to back off a little bit. All I'm saying is that if the market had, wider confidence, it could be that the wider market catches up. Right now, I think that you are in a sort of a stall mode where you can't imagine too much of this spread increasing. I think that the spread will come down, but the mid caps and small caps will not go up. Maybe the large caps will correct just a little bit, because the overall flows into the market are being hurt by our own actions.
Short on levers, Bajaj Finance, Britannias of the world, what I'm asking you is that, would you go short on some of these good compounders but expensive consumer staples and consumer durable stocks?
No, we will not go. We will not go short, and because we have seen that in the past, actually we are long some of them. The reason why we will not go short is that what we've realized is that suppose the market corrects. These will correct a little bit, but they won't fall 10%. The game is not in, you can not have them, that is fair, because that money then can be deployed in something else. But these stocks may underperform over a year, 2-year period, but from a shorting point of view, it's unlikely that they suddenly fall 10% in the absence of a crisis. And if there's a crisis and they fall 10, then the rest of the group will fall 20, even from here. So there's no point in shorting them. You may underweight them or not have them and use that proceed for something else. But shorting them hasn't worked, we have seen for many years now, and we don't.
Okay, fair point. Samir Arora, always a pleasure having you on the show. Thanks so much for taking the time out and chatting with us.